Hi everyone and welcome back. Have you ever heard of a Ponzi scheme? I'm sure you've heard of them. People get sucked in, they get promised great returns, they go and invest their money, more people join in, they start trusting the whole system, they add some more in, everyone feels rich, you've got people swanning around everywhere, and then one day they try to cash it all out and the money just isn't there. It's all gone. It sounds obvious like it's a scam, right? Well, what I want to do in today's video is show you something. According to official data, Australians have $2.6 trillion in bank deposits across this country. But there's only $101 billion in actual physical cash. So let me just say that again. We have $2.6 trillion in deposits, our money in the system, but only $0.1 trillion in cash, in real money, is available to pay us out. That means that if everybody tried to withdraw their money tomorrow, 96% of people are going to get nothing. Not because the banks don't want to give it to us, but because they literally can't. They don't have the money. So I'm asking the question publicly, is this really banking? Or is this the biggest trust me bro scheme in history? You might be asking yourself, what's he talking about? How could that be possible? A Ponzi scheme is fraudulent by definition. The banks aren't fraudulent. How could they be a Ponzi scheme? Well, let's look at some of the facts. This data comes from CEIC, who collect data for economists, analysts. They report that Australians have $2.6 trillion in bank deposits. But as of 2023, the Reserve Bank shows that we only have $101.3 billion in physical cash. That's in full circulation around the country. So there's a physical cash shortfall, notes and coins shortfall of $2.5 trillion. It is only a hypothetical. I'm not saying it's going to happen, but everybody did want their money out in cash tomorrow. It's just not there. This is a fact. This is reality. The reason that this happens is because the banking system relies on the fact that a lot of people don't need their cash right now, all at once. So our deposits really are digital numbers on a screen. Remember, fiat cash and dollars is not backed by gold anymore. That stopped in the 70s. So that's one of the reasons why the banks don't want people withdrawing larger sums of money, because firstly, there's not really enough of it, quite obviously. And second, restricting cash makes it much harder for criminals to carry out their activities. And obviously people who want to evade tax, they can't really get away with it as easily if they don't have cash. So in other words, cash can't really be controlled. Some banks today don't even accept cash deposits anymore. You can't withdraw cash and you can't deposit. They just don't operate with it anymore. According to this article from the Sydney Morning Herald, we're at peak cash right now. Okay? This article isn't brand new, but it's within the last 5 years. Cash in circulation is thinning out. They're not printing that much money anymore. It's very clear that we are slowly moving into a cashless society, a cashless economy, whether we like it or not. So what about our deposits then? What happens with those? Well, I think the first thing is a bank deposit is often misunderstood. A bank deposit isn't just you putting your money into a bank for them to store for you, for them to hold for you, for them to look after it for you and put it in some vault, although banks do hold vaults and they do have a little bit of cash here and there. But the money that you deposit is actually a loan that you give to the bank. So when you deposit, you are loaning money to the bank. You are the creditor, okay? The bank is the debtor. The bank is your debtor. They owe you money. And when the bank has your money via your deposit, the bank then uses that money that they borrowed from you to conduct their business. And that is to make a profit, to invest the money, to use the money, whether it be through trading, investing in companies, expanding their business. But they owe that money to you. That makes you the creditor, and that makes the bank the debtor. This is assuming we're not talking about mortgages or anything like that. This is just purely imagining you've just got bank deposits. So obviously, if even just a small percentage of us lenders tried to withdraw and take back our money all at the same time, the banks literally could not give it to us. Now, this practice itself is perfectly legal. The law allows it. But I'm asking, how do you feel about that as the lender? Me personally, I like to scrutinise who I'm going to lend money to. When you're the lender, you need to ask, what is the borrower actually using this money for? What's their business model? Who are its investors? Do I like the company? Who are they invested in? What security have they got? What guarantees have they got? Do I trust those guarantees? What return am I getting? But these are your personal questions that you're entitled to ask. You should ask these questions as the lender. If you go for a mortgage, they ask you a series of questions. Why shouldn't you? How many people knew that they were actually the lender? How many people knew that they were the creditor? Are you confident that you're going to be repaid forevermore? Is this a legitimate financial system, or is it the biggest scam that's ever faced mankind? You might ask, what the hell else am I supposed to do with my money? Aren't bank accounts insured? Well, yeah, they are, right? They're insured up to $250,000. But the Banking Act of 1959 gives APRA, the government, the power to take what it needs from you in times of crisis under their emergency powers. It's called bail-in. I've spoken about this in another video. And remember, accounts might be insured up to $250,000, but there is no big vault sitting around somewhere full of cash waiting to be paid out to depositors during some kind of crisis or collapse. What happens is if they did decide to pay it out, they'd have to print more money. They'd have to borrow more money. And borrowing money is printing money. It's creating new money. They'd have to borrow more money to pay out us depositors, which in itself, that practice devalues the dollar. It inflates the dollar. It reduces the dollar's buying power. And what are we actually left with? What did we benefit? So this is why a lot of people choose not to leave much money in the bank. Instead, they look to buy assets, or what they see as assets, because everyone views assets differently. Some people want stocks, some people want property, some people love gold and silver and precious metals, some people love crypto, Bitcoin and all that sort of stuff. Ultimately, assets that aren't put in the bank that they believe will appreciate over time. So that leaves us with the big question. We've got $2.6 trillion in deposits. In Australian banks, we've got 1.6 trillion of that just is belonging to households. That's just your regular bank accounts, just your saving accounts and your term deposit accounts. We've got a whole lot of numbers on a screen, and we've only got 3.8% of all our deposits in physical cash. So what would actually happen if we decided to pull all of our money out of the bank and purchase gold or Bitcoin or any other asset tomorrow, hypothetically speaking? What would actually happen? So if this happened, which is obviously very unlikely, if 15 million Australians decided to withdraw the $1.6 trillion worth of deposits we households have lended to the banks, because currency inflates, it loses value, it can be printed to oblivion, and we just decided one day that we all want to buy something a little bit more tangible, a little bit more valuable, a little bit more real, something that we can exchange without the need for a bank, bartering, gold, whatever it might be, silver, Bitcoin, cows, livestock, whatever, then what would actually happen is all of the big four banks and all of their sub-banks, all the smaller banks are generally, in most cases, tied to the big four banks. You know, all of this, so like the Bank of Melbourne, the Bank of South Australia and Bank of Queensland, they all fall under the big four. They would be insolvent overnight. Their share prices would collapse. Our super funds would collapse, be absolutely decimated. It would be financial Armageddon. And it wouldn't end there. It'd eventually start impacting the supply chain. It would impact employment. Corporations would be gone overnight. And that's a fact. No one can argue that. It's not illegal. It's obviously legal. There's nothing unlawful about what they're doing. But I feel like we aren't really aware of this and we aren't really being told. It's totally accepted by society as normal. Now, will any of this ever actually happen? Well, that's the question, isn't it? It's always back to the what if. But that's what you as a lender, you as a creditor, need to ask yourself. The government tells you what to do a lot of the time. They tell you to go and seek financial advice. I'm not telling you not to do that. If you want to do that, you go and do that. They'll tell you to go to an expert from qualified experts. Just be aware these qualified experts are educated under the very system that gave us the banks and that keeps the banks going. If you ask the experts, ask them, do you think that this will ever happen? They're going to laugh at you. They're going to say, no, don't be ridiculous. Absolutely not. They'll say it's impossible. But that's because their entire lives are built around this system. Their lives are built on this system. They were indoctrinated by it. They were taught not to see this. They were taught not to question it, taught to ignore it, downplay it. Oh no, that'll never happen. That's fear-mongering. Well, is it? Or is it just awareness? Is it just knowledge? So if people who work in the system, if they paid any attention to it, it's going to ruin their flow completely. They're part of the system. They actually make up the system. I've got nothing against them. This is just how it works. If you want to go down that path, that's cool. But you're the lender. If you have liquid, if you've got the cash, you're the lender. You're in charge of what you do with it. If you want to lend your cash to a bank, unsecured, and you want to get your 4 to 5%, 6%, whatever they give you in return every year, well, that's your choice, right? If that makes you feel safe and that's what you like. But if you want to take your cash and you want to buy something that you believe is going to appreciate in value, well, it's your money, isn't it? You can do with it what you want. I don't know, a lot of people buy collectibles that they want to go up in value. Obviously, precious metals, diamonds, crypto, that sort of stuff. See, if you've got a bank balance, all it really is just digital numbers on a screen. That's all it really is. And that can be taken from you legally and lawfully. I know a lot of people have tried to argue with me, but read the Banking Act of 1959. It can be taken from you and it used as a bail-in during a crisis. Digital fiat money itself, cash money, bank money, it's inflatable. If you like that, good for you. But if you've got some shiny gold coins in your hot little hands, if you've got your Bitcoin stored away in your cold wallet offline somewhere, if you've got your valuable Hot Wheels collection or your Nike shoes or your diamonds or whatever, you've got real tangible value that's in your hands. That can't be taken unless someone comes into your house and, you should be all right as long as you don't live in Victoria. The only way they could get hold of it is by asking you or telling us, mandating it, that you must surrender it. Now, in 1933, the US government tried to ban gold ownership, but it's pretty well documented that only a fraction of the population actually handed anything in. So you do your research, you know who you are, you understand how the banking system works, you know how money works. That's what's important. In my experience, everyone has different opinions. One says I buy Bitcoin, another says I buy gold, another says he buys rare cars or rare gems. Isn't that the beauty of financial freedom? Because we still have financial freedom where we sit right now. But where we decide to put it will determine where we're at, where we end up. You decide, you do the research, you keep an open mind. Thanks for watching. I really appreciate you joining. If you found this video helpful, hit like and subscribe, throw a comment down below, and I'll see you in the next one.